Hello friends, hello investors, happy summer. Dani Beit-Or here from Simply Do It. And I want to take a moment of your time to discuss about where we are right now and what I think, in my humble opinion, you guys can do right now about investing in real estate, investing in real estate. So where are we? So this is being recorded today, is it either the 1st or the 2nd, I think the 2nd of August 2022. And what we are seeing is the following. First of all, probably like me, we are getting a lot of mixed signals. On one hand, we definitely see that in the past month or so, real estate wise, things have kind of quieted down. They did not crash, things are not crashing, but maybe not many multiple offers on every house that gets listed within a few hours, what we used to see even 2 months ago. So that may be kind of quieting down. Second thing is we're seeing big corporations around the country that are either starting to lay off or are ceasing hiring or something along those lines. So some of those companies are also putting out messages that they're doing one or the other, and maybe they're not necessarily doing as much as it sounds like. The stock market, obviously, we know what's going on. Everything, it's either crashing or going down, or significantly went down since the beginning of the year or more. So those are all signals to us that the economy is slowing down or transitioning, and some of us may even interpret that this is showing signs of crashing or going down rapidly. Now, I don't know about you, but here's my interpretation of the time we are here. Oh, by the way, inflation is, the mixed signal is the inflation is still high and the interest rates are going up. So what the heck is going on? There's things are going up and things are going down, and it's confusing and you're not sure. So what do you do? How do you interpret it? So first of all, every one of us has our own belief system, our own interpretation of the economy. I have a friend who's an economist, a very good friend, and he's actually have been talking about a decline or things going down probably for the past 3 to 4 months. I remember us having dinner about 3 or 4 months ago, and he said, I believe things will start going down, or I see all the signs of things going down. And to a certain extent, he is correct. Obviously, 4 months ago, things were still seems to be crazy prices wise, and things have slowed down. So he believes and acts accordingly. So he's actually getting ready for a crash. That's one of my friends. Another friend is more optimistic, saying, you know what, I think this is time for opportunities. So maybe I should not hunker down, but actually start looking for opportunities. My take is this. First of all, let's try to understand kind of the forces here, and you need to decide where you are. And I want to share with you what I am seeing, which is neither one of those things. So first of all, not all U.S. real estate markets are crashing. Or sorry, I shouldn't say crashing, are slowing down. My area, my neck of the wood, Orange County, California, inventory is still low, prices are still strong. I'm looking on a daily basis kind of to get a feel, and I'm not seeing any opportunities. So Orange County, California behaves in a certain way. When I talk to my team in Kansas City and St. Louis and Florida, they're all telling me very, similar stories. Yes, houses are sitting a little bit longer, not multiple offers on every house that comes out. So things are more relaxed, but by no means there's an abundance of our inventory, or the prices are going down. That is not the case when I talk to clients from Austin and I talk to clients from the Seattle area. They are reporting on a decline. So you see, every market behaves a little bit differently. Now, on the other hand, it seems like builders are already slowing down construction or building new properties. So if builders are slowing down, that is an immediate impact or not an immediate impact, but almost immediate impact on the inventory, that it's already tight. So if we strip all the unknowns, the inflation and the interest rate and the companies and corporations behavior, and we just focus for a second on one basic rule, which is supply and demand, which is not the only power play that we have, but it's a very strong power play. We are still in a market that the demand for housing, even with the high interest rates or higher relatively interest rate, the demand is very high and the inventory is relatively low. If you really want to understand why the inventory is low, it actually goes back all the way to the crash of 2008, when back then builders almost completely stopped building new houses. And since the crash of 2008, they've been trying to catch up with the demand and not successfully. Remember, population continues to grow in this country by means of natural birth and by means of people migrating in. And that, remember, there's also in-migration patterns within the country. So some areas maybe are shrinking, others are expanding, and the demand may be differently from one market to another. So what's going on? On one end, things are shrinking or negative signs of layoffs or stop hiring in stock market. On the other end, increasing interest rate, increasing inflation rate, still strong demand. In the future, or maybe kind of a little bit into the future, it seems like the builders are already giving us signs of slowing down construction. So inventory is not showing signs of picking up or catching up with the demand. Confused? Well, join all of us. We are all confused. But there's probably one silver lining here. So a lot of people, investors that are in times of uncertainty, in times of, let's call it fear, what they do, and I'm talking about homeowners, buyers, sellers, a lot of people, in times of uncertainty, they do one thing. They, climb on the fence and sit. They wait and see. I have few investors that have terminated transaction, kind of halfway through or the beginning, during the due diligence period. They just terminated for one reason. I am uncertain about the economy, and I get it. But what are you going to do about it? And let me tell you what I have seen happening in the past in times of uncertainty. In times of uncertainty, I have seen in the past that those who actually interpret it as a time to be bullish and make offers will most likely come very beneficial or benefit from the times. So times of uncertainty are usually a short window of opportunity, usually several months. And why is it several months? Because on one end, uncertainty starts, but people eventually start acclimating and getting used to a new reality. So let's say there's the first month of uncertainty we're trying to figure out, and then within second or third or fourth month, we are kind of seeing a pattern where things are going. If you go back even to the biggest uncertainty of our recent history, the March of 2020, when the COVID came into our life, if you really think about it, March, April 2020 was a lot of uncertainty, tons of uncertainty. In May, continued to be more uncertainty, but comes June and July, things started to be a bit clearer. How terrifying or not, how horrific or not, and I'm not judging, I'm not saying right or wrong, I'm just saying it took maybe 3, 4, 5 months, which is a long period of uncertainty for all of us to live in, for people to really start getting getting used to the new norm and finding ways how to maneuver or operate or make a decision with the new reality. Truly an huge uncertainty of reality overnight, and things started to settle in a new format, in a new way. And that's a very impactful situation. COVID-19 is a major event in our recent history, and we will probably remember and analyze and review it for the years to come. People will call it maybe the generation mask or generation M, or I don't even know how they're going to phrase it, but that would probably, happen. But I'll give you one example. In May of 2020, I think April, but probably May of 2020, right? About a month and a half, two into COVID. When I spoke to one of my teams, and they told me, Danny, we don't know what to do about, we are also not sure what to do about what's going on right now, but we can tell you what we see the local experienced investors are doing. And what are they doing? They are leveraging the opportunity. They're using the uncertainty in their favor, and they're buying like crazy. I'm talking about April, May, June, July of 2020. A lot of those experienced investors leverage this opportunity of uncertainty in their favor, and we all know how well they did, those who actually purchased in a good market. So I have seen it in the past. People are now not sure what to do. So here's my suggestion to you. I'm not saying you should buy just because the house is listed. We are taking cautious, measurements and buying more, let's just say a little bit more carefully. And if the numbers are there and if it makes sense, we're going to make a bit more aggressive offer. But we already know that sellers are now joined all of us in the times of uncertainty. So if the sellers are in an uncertainty phase and many buyers are in an uncertainty mindset, what amazing opportunity for us, those who cannot realize what's going on, to buy good properties and for a good price right now. And if you're a bit hesitant because of the high interest rate, I want to tell you a couple of things about that. Number one, if you're looking at the interest rate as something that blocks you from or prevents you from moving forward, I think you're making a mistake, because yes, we are a higher interest rate than a few months ago. Number two, from my experience, most likely, no promises, no guarantees, but anywhere in the next year, 2 or 3, we will most likely have an opportunity to refinance and lower the rate. So we're locking the house, in a good opportunity of uncertainty. Uncertainty, good time to buy, right? Good time to buy. But we are paying a price. We are paying a price of a higher interest rate. But remember, you are not married to this interest rate forever. Sometime in the future, hopefully within a year or 2, but it could be 3 or 4, right? There will be most likely an opportunity to refinance and lower the rate, and then the house that we purchased a few years ago now will cash flow better. So that means we are looking at few years of more challenging cash flow with the higher interest rate, and very likely will lower the interest rate a little bit further down the road. So if you're looking to do a short-term investment like a flip, you probably are just exposed more. Maybe you will not benefit from a strong backwind of high inflation or price increase like we did in the past 2 years, and even the past 10 or so years. But if you're doing a long-term investment and you're buying quality and you're using this leverage, this opportunity to buy in a better price, than the market value or the seller is asking, this is an opportunity for you to maximize on this uncertainty. My guess is that within 3 to 4 months at most, we will be out of this phase of uncertainty. We will know better what things are going on, and possibly more buyers will come back into the market because they can no longer be, want to be in an uncertainty kind of a mindset, right? And things will be a little bit clearer where they're heading. Is this a guarantee? Obviously not. Do I know the future? You know the answer for that. But it's just my interpretation of what's going on and trying to make sense in this uncertain times, and possibly how to leverage in your favor. Let me give you an example. One of my foreign investors made an offer on a fourplex the asking price was $460,000. The offer was submitted about 3 weeks ago or so, somewhere around 2.5, 3 weeks ago. Got accepted, fourplex, for $460,000. Out of the fourplex, 3 units are rented for about $1,000 each. I think $1,050, $1,050 each. So it's almost $3,200 a month. And 1 unit is just vacant at the moment in between tenants, and that will bring an additional $1,100-ish or $1,150, in rent or supposed to be. So that would be a $4,400 a month in rent. We got the offer accepted. Everything, we did an inspection. Everything is, everything is okay. Obviously, there were items that we want the seller to address, and the seller will address those items. Nothing horrific, nothing catastrophic. But my foreign investor got a little bit nervous about the price and felt that maybe in the current times, he should actually not buy for such a high price. So I told him the following. I said, before we cannot terminate, I want to ask you something. First of all, if we get it for the right price, are you still seeing this as a good opportunity or not at all? He said, Danny, I think this is a great opportunity for me, a very good fit. It's only the price I'm worried about. I said, great, let's move on. I want to ask you a question. That was last week. I said, what would be a price you're willing to buy this property for? Remember, it's listed and under contract for $460. He said, honestly, I gotta have it 45,000 below for $415. He said maybe 420. I'll be okay with that. And if I can get it for 420, I'm in. And if I'm not, I'm not interested. Said, you know what? I think it's a very aggressive price reduction you're asking. But if you're already planning to terminate, how about we just give it a shot? Let's give it a shot. And I spoke to the agents and kind of coached them on how to present it to the seller, why to justify, the price reduction, what's the reasoning behind it. When a seller when you're asking for such a significant price drop from a seller, we should be able to bring justification and ways to convince or explain to the seller why this is in their favor, in their benefit. The seller came back, I think $20,000 price reduction. That was not acceptable. And then he came back and said, you know what, I'll do 35,000 price reduction. So we dropped it from 460 to 425, which is $5,000 more than the buyer was willing. The buyer said, no problem, I'm still okay with it. That's fine. I'm not going to kill a good deal for $5,000, and we are moving forward. Closing is scheduled for next week. It's a cash offer. That's part of this, was able to kind of smooth things through. So we are on track to close next week. Why did the seller accept it or was willing to drop by 35,000? Guess what? I think it's really reflecting, the times we are in. So that's why I'm saying, and this is by the way, the second situation, a similar situation that we had in the past month of a bit more aggressive price reduction, not super aggressive, not lowballing, but definitely price reduction. And the seller agreed to do that. So bringing everything together, there's a lot of confusion what's going on out there. There's a lot of mixed signals of things on one end are doing well. Remember, the unemployment right now is still strong. The economy is still flourishing in many ways, but at the same time, we're seeing things slowing down. And a lot of it is, is population psychology. People are like, wait, what's going on? I'm not sure. Let's close down. Close our wallet, close everything down. Don't, let's not spend until we know what's going on. And this is the ripple effect, right? That's usually what happens in times like this. But there's still money out there. Loans are still being given. Rates are, higher. For us, there's, if we are thinking about what to do, it could be very, very confusing. And our immediate default is, let's wait. And I get it. I want to wait too. By the way, I closed on a property about a month and a half ago. I want to wait too. But all my experience have told me times of uncertainties are time to actually utilize, to leverage in your favor. So that means find a house, less competition, make a more relevant, realistic price, and hopefully we can get it. I hope you benefited from this video. I want to apologize for all of you who responded back to our announcement about me coming to the Bay Area actually this week for one-on-one meetings and requested to meet, and the schedule was already full. I apologize. We're going to try and set up another day for a face-to-face meeting. But remember, we are always set up to do either a Zoom meeting or phone meeting, no problem. That's probably 90-95% of the meetings we are holding are over the phone or Zoom. No problem at all. We're all used to it by now. Thanks very much for watching. Remember to leave me a comment, feedback, input, and you're always welcome to reach out and schedule a time to speak with me. Free, no charge, kind of discuss if what we are doing, the way we go about investing, us at Simply Do It, is benefiting or could benefit you. Thanks very much. Have a terrific rest of your day, and I hope you're enjoying the summer. Bye-bye.